Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
But for healthcare, they are running on chassis that are technology platforms a lot of times that you're like, wow, how do you guys are doing $25 million a year in sales, and this is what you're using? And so we love being able to solve those pain points and create less friction in the workflows of practices and how they interact with patients. And that's something that's very unique to the healthcare industry, right? Tons of opportunity and huge space and a lot of problems to solve every day.
That was Todd Watts, the CEO and co-founder of PatientFi, and he is my special guest on this episode 181 of the Leaders in Payments podcast, and I'm your host, Greg Myers. Todd is an avid history buff, Yale graduate, and prominent change agent in the healthcare vertical. He got his start at the intersection of healthcare and financial services. Todd has a fascinating story that revolves around choice, a choice to build a business directly in the epicenter of two of the most regulated industries today. PatientFi is a technology platform that provides an affordable and user-friendly modality for patients to finance their healthcare procedures. Their target market includes any aspect of the healthcare vertical that is not covered by traditional medical insurance. What makes them stand out is that their solution offers a one-stop shop to enable approved financing options that are faster and easier, and they can ensure patients' approval on almost every application. Todd and I go on to talk about his journey to becoming the CEO and what makes his solution such a leader in the industry. We've got a great episode ahead, so let's get started. Hi, Todd. Thank you for being here and welcome to the Leaders in Payments podcast.
Thanks, Greg. It's a pleasure to be here. Thanks for having me.
Absolutely. So let's dive right in. If you don't mind, tell our audience a little bit about yourself, where you grew up, where you went to school, where you currently live, a few things like that, and then we'll dive into your professional background in a minute.
Yeah, sure. Thanks. So I grew up in Southern California, had a wonderful upbringing here, and too many sunny days probably ended up moving after attending USC and moved to the East Coast. I started my career in the investment management space, working particularly in financial services, doing hedge funds and hedge fund of funds. And after I'd done that, I went to business school at Yale. And after Yale, went and worked in the consumer and healthcare investment banking group at JP Morgan in New York City. After doing that for a few years is when I started my entrepreneurial kind of journey, I would say, in 2012. I moved back to California with my wife, and I was part of a founding team that was in the payment space within healthcare, very similar business to PatientFi, which is my company today. But that prior company was called Alpheon Credit, a patient financing business focused on a number of different specialties in the medical field. And then we also had a med device product as well. That ended up being a fairly successful venture. And then we moved on to my partner and I, who was with me at Alpheon Credit. We started PatientFi in 2017.
Okay. All right. Well, let's talk about the company. So tell the audience more about what PatientFi does.
Yeah, PatientFi. So as the name suggests, we partner with medical practices across the country. So we're in 48 states now. We have partnerships with 1,500 medical practices. And the value proposition that PatientFi offers is to offer a financing alternative to the patients of those medical practices. So was the leader in changing how medical practices, training them how to do so, and then obviously using our platform on how to market things like LASIK procedures for $199 a month instead of $7,000. So with PatientFi, it's a seamless platform. I'd love to get in a little bit to the technology and the differentiators of how we built it, but more PatientFi has kind of created an ecosystem around it, which is really important, I think, for businesses like ours to have several key stakeholders that you're adding value to. So what we do is offer an affordable way for patients to be able to pay for medical procedures not covered by Medicare, Medicaid, commercial insurance. So they're getting access to healthcare treatments they otherwise wouldn't be able to have. And that's across fertility, dentistry, ophthalmology, plastic surgery, kind of just think anything that's paid for out of pocket. medical practices are able to be able to increase their case acceptance, help more patients with our platform, and it's all done through a very seamless process. And then where PatientFi really differentiated ourselves is we started bringing medical device manufacturers into kind of our ecosystem. And what that means is, they're selling a number of different products to doctors' offices to then sell to patients. And no medical practices had ever thought, like, just an analogy, the medical industry, I think, hates it, but it's the right analogy, is kind of a car dealership selling financing through their dealerships and offering and making sure their consumers are aware. So we partnered with medical device manufacturers as well, and they've seen kind of dramatic success with PatientFi, and it's been a huge, I'd say, driver of a lot of our market adoptions and some of our key medical specialties.
Okay. And I would assume this is just in the US today?
That's right. We're just in the US today. And a lot of that's driven by, the regulatory environment. It's a big lift, as, a lot of my colleagues in the payments industry would know, to get a business like this up and running and compliant across all states. It's US only and will remain that way for a while.
Okay. And how big is the company?
Yeah. So we have about 65 employees now, all full time, kind of across the different parts of the country, but we're headquartered and we have about 35 employees in Irvine, California. Our kind of run rate revenue now is north of $20 million a year. And we're doing about run rate $240 million in new loan volume a year. And, the business has kind of tripled from last year. And based on how we're doing this year and kind of our expectations for next year, it should triple again. So it's been a nice kind of trajectory.
Okay. And you mentioned, just so the audience is clear, so typically it's procedures not covered by insurance.
Yeah, that's exactly right. Or, a lot of times what we'll find, and a good example of this would be someone gets cataract surgery, which is in ophthalmology, and they want to get a premium IOL. Sometimes, right, you'll have a deductible or insurance will cover part of a procedures. We do that quite often, is where you can use PatientFi to cover the piece of your procedure that's not covered by insurance, or if it's a high deductible, for example, and then the rest is covered by insurance. So it does vary.
Okay. And then how do you go to market? Do you use a direct sales team, or do you have partnership channels, or a little of both?
Yeah, it's a little bit of both. And part of that is with our medical device manufacturers, which has been an important channel partnership for us. And, we have partners in aesthetics, plastic surgery, new partnerships in ophthalmology and dentistry. And we're, a lot of times we're partnering with their sales forces, which are already in the field. But for the most part, this has grown the business over the last, going from 0 to 1,500, primarily organically. And we've never had an infield sales force, and we've never had more than 5 until recently to kind of keep up with the demand. We've never had more than 5 inside sales reps.
Is there a lot of marketing and training that you have to do to your customers, because aren't they the ones that are really offering the product?
Yeah, no question. So, and that's where I would say more than anything else, the core competence and what the market adoption of PatientFi has, the source of a lot of that kind of traction we've gotten is just in the ease of use of the product. So, many of our practices that come on board don't even need to get trained. All of the resources are right there at their disposal. So they come on board and are able to kind of onboard, seamlessly offer PatientFi, and sometimes they won't even schedule a training. And that's where we spent, several years refining and redoing and refining the product experience, right? Because you're building a portal for the practices, the medical practices to transact on, the patients obviously to apply and be able to make payments and be able to make that interaction between the practice and the patient as easy as possible. 90% of our applications are done online, and candidly, a lot of our merchants even process transactions right on their phone, which doesn't really exist in healthcare. Normally, people are still behind a desktop computer, punching a bunch of numbers, and the patient really doesn't know what they're doing, just kind of like an airport. And we've tried to kind of make that a very seamless experience.
And you mentioned wanting to dive into what differentiates you from a technology perspective. So can you speak to that?
Yeah. So, we've done a couple different things. If you look at our tagline, PatientFi, it's the friendly way to pay. So from a product perspective and what we deliver as offers to our patient borrowers and the applicants. So the product we offer is a friendlier product in the sense that any of the competitors like credit cards that are, we do have to think about and we compete against for share of wallet in the practice. They do things like compounding interest at, $25.99, $27.99. So PatientFi the hallmark of our product is just focused on a monthly payment, and it's very easy to understand long-term loans. And that's in the product itself, how it's differentiated now, kind of moving into the technology. What we've done is layered on its PatientFi. We have partnerships with banks and credit unions where we'll be able to offer, let's just say, call it, for lack of a better word, a first look financing product for patients. And there's a lot of the kind of algorithms and credit underwriting that obviously goes into the decisions that we make on behalf of our bank partners and credit unions. But we also have integrated second look partners, as well as kind of a last look ability for the practices to be able to offer themselves financing. And what all that means is in delivering in one environment just to the practice where they can process it seamlessly, effectively a full solution where they don't have to have any patients that don't get approved. And for an environment that is the lender, in the sense that we're with our bank partners offering kind of the first look product, there's no one else out there that really has that full spectrum. And then obviously from now you have an application that is just easier probably, I would say, than a lot of our competitors, but it's delivering better approvals. It's delivering higher amounts of approvals, which obviously our merchants love because they're able to help more patients, right? And then the practice portal itself, you can't take, and we've seen it time and time again, where people from outside the industry, if you have someone who's doing, we kind of saw it with Green Sky, candidly, where they were in the home improvement and they kind of moved into the medical lending business, and patient financing is really its own atmosphere and what the workflows are of the practice. So everything we built by virtue of what we called it, we don't do auto, furniture, home improvement, and patient financing. We just do patient financing. The whole platform is built specifically to what our experience knowing what the interactions are between the patients and the providers.
Okay. And where do you see this industry headed, say, in the next couple of years? I mean, obviously, payments is integral to it. And, we know all the changes that are going on in the payments world. But are there other things within your space that you see changing in the next 2 to 3 years?
Well, something that it continues to evolve in our space is the patient is continually getting more educated, and candidly directly from manufacturers, other channels. It used to be if you wanted to find something out about, if you were interested in getting ophthalmic procedure done, or let's say dentistry, a lot of times you'd have to go into the provider's office, the medical practice, to ask, a lot of those questions. Now the patient's getting more and more informed about medical procedures, and they can do a lot of that research. And again, this is for outside of disease-based and catastrophic care. So what does that mean for PatientFi is our relationship with the consumer, the end consumer, is the gap between us, just the same as medical device manufacturers, is narrowing. So where PatientFi is really focused in the next 5 years and where the industry will be going naturally, but we want to be a big part of that, is kind of being the leader in addressing the affordability and the education of, look, you can pay for these procedures on a monthly payment, especially those like women going in getting $800 Botox treatments 3 times a year. That can be paid for $129 a month, and it just feels like a subscription. And what PatientFi wants to be the leader in is attracting patients to the affordability that we create, and then be able to actually send those patients to our network of providers. Not so much the other way around, right? Where you're relying only on the provider to be the kind of lead generation for your borrowers, be able to add that extra value to your providers and send patients to them. And we're not that far off. We're already doing that in certain medical categories, but a lot of them, as we add more providers in dense areas or our concentration of providers in certain areas, we're starting to kind of test that to be able to do DTC campaigns to push patients to providers.
Okay, that's interesting. How has this kind of, and I say resurgence because this has existed for a while, but it became really popular a couple years ago, the whole buy now, pay later. I know there's a few folks out there offering that in the healthcare space. Has that affected your business positively or negatively or at all?
It definitely hasn't been negative. And reason being, buy now, pay later was kind of I like to tell a good way to describe it is last year, we're a venture capital backed company. And last year we were doing one of our series rounds, and, the investors would ask us, like, explain to us how you're like buy now, pay later, because that was a way for them to candidly justify paying maybe a higher multiple. And we're not actively really raising money, but we'd spoken to investors now and they're like, well, defend how you're not like buy now, pay later. And it's like, nothing's changed with buy now, pay later. It's the same business model. What happened? So why is it not something that's candidly why we're not focused on Affirm and others is that's a product design. And there's other examples like Affirm has Peloton that are kind of long-term loans. But in general, the classic buy now, pay later business model, right, is 4 payments, split them equally. They're a lot less as far as like credit. They're not doing kind of the amount of rigor and comprehensive credit checks we are. Our average ticket size is $5,000. And buy now, pay later is really designed for a online checkout experience and there's the merchant is typically bearing the brunt of a lot of the revenue generated by them. PatientFi charges interest to the patient and a more modest fee to the provider. And that's the way we compensate for risk and kind of, as we're going into a downturn, right? We have different levers that we can pull on to make sure we're appropriately accounting for that risk. So if we were in a medical space, and I can't even think of one, maybe general dentistry where the ticket size is so small, it would concern me more. But if there's also such our customer base is so scattered across the US with independent providers, it's not like that you can go do one transaction with a big e-commerce site and take out 20% of our revenue. It's pretty hard to find out where PatientFi is and where even other patient financing companies are, given it's a brick and mortar kind of lending environment across the US. So we haven't seen any kind of you'll see a lot of patient financing companies because they almost have legacy marketing from last year that they say buy now, pay later, patient financing. And candidly, 90% of those are just saying buy now, pay later, but they're not doing kind of that the classic 4 installment plans. It's just a catchy phrase that candidly shouldn't be used as much anymore, given it's got, valuations are down 90%. But
right. Yeah, it certainly doesn't have the cachet it had even a few months ago, right?
Crazy. It's a sea change of opinion. And I think a lot of that too is the regulatory risk. And a lot of people are looking at the buy now, pay later industry that, don't get me wrong, adds a lot of value, but it is going to look different a year or two from now. It's here to stay, but it's going to look a lot different.
Are there any trends or anything going on sort of in the underwriting space that will make your life easier in the future? It's not something we talk a whole lot about, although it's a huge part of payments and probably a large part of your business. But is there anything trend-wise or interesting going on in that space?
For sure. I can tell you, as far as PatientFi, we one of the interesting parts and can be limiting a little bit of what being a non-bank lender is, you do rely on the kind of classic traditional underwriting methodologies of your banking partners. So, what do I mean by that? FICO, as an example, right? A lot of the banks are they're governed and from outside and inside regulated to make sure that if you are selling your loans to banks or you have a bank partner, they're governed a lot by credit agencies as far as their own performance and what they're buying. That, I think, concept has kind of slowed down non-bank lenders and fintech's ability to get really creative, unless they just want to hold everything on their balance sheet, which I would advise against, particularly in this environment. But you're beholden a little bit to that kind of traditional underwriting because that's what banks and credit unions understand. Having said that, when you get enough lending under your belt, you're able to start to be a little more creative because there's trust and that is, you're able to kind of prove that you know what you're doing over time, and then you can support it with a lot of data. So where am I going with this is we're particularly interested in is getting a better understanding of kind of borrowers' banking activity and kind of what they're doing. I would ask somebody, who would you rather lend to? Someone with just looking at their FICO, or if they were able to provide you access to say, hey, I've never had less than 3 times the monthly payment amount that I'll have with your company in my banking account over the last year. So there's a lot of things that are now can be delivered in a very quick 90-second application. And you can get access now with the borrower's permission to things that are much broader than FICO. And the good news is a lot of banking partners are starting to get a better understanding of some of these kind of alternative credit underwriting methodologies. And then where we've really taken it to another level, I think it is unique to the point of sale industry like the PatientFi is in, is underwriting the merchant. And we after every time someone does a procedure with PatientFi, we ask how it went. And we ask them, rate your experience 1 to 10. How did things go? Are you satisfied? What does that do? Well, outcomes and patient satisfaction, or even any consumer satisfaction, is directly correlated to repayment. So the more we can identify merchants that we work with that are providing great services, you can actually underwrite and change the pricing based on the merchants you're working with, the category merchants, which directly influence kind of the performance of your credit portfolio. So, and that's kind of introducing another variable into the equation for underwriting that, if you're not in point of sale, you're doing direct lending, you don't have access to, right? So right now, people have to get creative. Obviously, in this environment, we're trying to be conservative. We've improved our average FICO score 30, 40 points over the last 6 months alone, trying to make sure that we're flexible going into recession and then potential recession, and also looking at alternative sources of data to get even smarter with underwriting.
Yeah. It sounds like overall the use of data and just having the intelligence behind it and understanding it is becoming a bigger part of your business and underwriting in general.
Yep. A year ago, we didn't have this, but as we've scaled, now we have a full data science team, obviously a credit team. And, that's something that will continue to expand, that I am focused on a daily basis, making sure they have the resources and things they need. Because at the end of the day, the longevity of a non-bank kind of fintech lender like PatientFi, the staying power of a company like ours is going to be in the credit performance. It's not just, hey, let's see how big we can make this, grow the loan volume. You have to be able to have performance in your credit portfolio that can kind of last through cycles.
All right, well, let's switch gears a little bit and talk about you. And you already sort of walked us through your career journey a little bit, but maybe talk about what attracted you to healthcare and healthcare payments. Sounds like this is your second foray into it. So obviously you have some interest there. So maybe you could talk about that.
Yeah, I've just always been candidly fascinated by the healthcare industry. I mean, I think adding the dimension of changing kind of healthcare procedures and things that we're financing versus just financing blenders and shoes on the internet, right? There is this level of innovation and things that happen, which we have to stay abreast of and on top of, because as I mentioned, different procedures and different things that people do, the credit performance and how you interact with that patient and that, as well as that merchant, changes from category to category. So I've always been from my days back at JP Morgan, and that's really where, the intersection for me between, I would say, financial services and particularly being introduced from healthcare, because I was on investment management, which is considered financial services, but has nothing to do with what I eventually ended up doing. But when I got introduced to some more healthcare companies and the industry in general, when I was at JP Morgan, is where I kind of just started to have a genuine interest in the space. And then, like everybody knows, and this is getting better, COVID has changed us a lot. But when I tell people kind of how the process is for some of our competitors, and that sometimes it's even paper-based, and they don't believe me, and I say, well, what's the first thing a lot of times when you walk into a new doctor's office they ask you to do? Well, they hand you a piece of paper to fill out, and we're talking like the biggest industry in the world. How is that possible? Well, that's the part that we have a lot of fun with. Is there are a lot of parts of healthcare, and it's a fascinating industry. I don't pretend to have a clue on all the pace of clinical innovation, but where it is behind is technology. And when we can come in and solve huge problems for providers that in other industries may have been solved years ago, but for healthcare, they are running on chassis that are technology platforms a lot of times that you're like, wow, how do you guys are doing $25 million a year in sales, and this is what you're using? And so we love being able to solve those pain points and create less friction in the workflows of practices and how they interact with patients. And that's something that's very unique to the healthcare industry, right? Tons of opportunity and huge space and a lot of problems to solve every day.
Yeah, very complicated.
Yeah. Choosing to do a business that's between financing and healthcare, it's like the two most regulated space, and PatientFi is dead center in the middle of them. So this might be the last tour. It gets exhausting. It gets exhausting.
I imagine so. Well, what are some things you're passionate about? So maybe one business passion and one personal passion.
Yeah. So not to sound like the standard package answer, but as I've matured kind of in my career, I didn't know that I would enjoy leading teams and being a leader as much as 10 years ago. I was a numbers guy and had my head down in financial models and loved solving kind of complex problems. And where I would say get the most joy in my day-to-day is being able to build teams, see them become very effective as a team, and candidly helping people to grow in their careers. And that's been, I'd say what's given back the most to me in my career is that piece of it, and having the kind of opportunity to be in a seat to lead people and watch them have their own successes. And I think PatientFi has done a great job at fostering. We've had almost no turnover, and almost always we try to promote from within, and that brings a lot of joy and satisfaction. That's the selfish part, awkwardly for me, that being able to watch and be a big part of. And then outside of work, I have 2 young boys, and I've had all sorts of hobbies over the years, but they command, and my wife command, almost all my attention because, as other founders know, it's an extremely busy couple years when you're starting a business and getting it going. So I'm trying my very best to put some of my habits or my hobbies on hold and spend as much time with my family as I can. And I am to some degree a family guy in that way. And it's been it's a careful balance. But I would say just what's the odd obsession is World War II history stuff. And I go out to museums and do all sorts of things like that. But not many people even know that about me, but you asked.
No, that's interesting. I think I've done about 180 of these, and I think you're the first one that's sort of a history buff around World War II. So that's kind of cool. Well, this is the last question before we wrap up. What advice would you give someone coming into this? And it's interesting because you've kind of positioned it as the financial services and healthcare. But if someone's coming into financial services, fintech, payments, kind of lumping it all together, what would you tell them they need to do to be successful coming into this industry?
I kind of alluded to this a little bit, and this won't change for a long time, because banks, credit unions, deposit-backed financial institutions are deposit-backs. They will always have the cheapest, most cost-effective access to money to lend. They will always be, to some degree, kind of the bedrock and the necessary part of the foundation of any fintech, in this particularly in the non-bank lending space. So what does that mean is I would, as early as possible, bring on people that understand the banking industry, understand the compliance, and a lot of the things that will allow a bank or a credit union to quickly get comfortable in doing business with you as a financial technology company. I can't stress early enough that doing that earlier than you might think is appropriate is always the better decision. And it's hard for people that are starting out in the payment space because, that doesn't sometimes feel like a revenue generating activity, right? They want to be investing in the product, things that will get them to market as quickly as possible, be able, invest in things that'll drive sales. And it is a cost center, but it also translates into your ability as soon as possible to partner with banks and credit unions to be able to get your cost of funds and, your ability to scale with a large balance sheet partner. The sooner you have that, the farther you'll be able to go, and you'll be able to get there a lot quicker.
Okay. Yep. I think that's great advice. So, Todd, we've covered a lot of ground about you and the company and some of the things going on in the industry. Is there anything else you'd like to add before we wrap up?
Well, I appreciate your time for sure, but I've now listened to more of these, and I think that folks in the fintech space can do a better job sharing kind of best practices and ways that lessons learned. And I would, encourage others to, whether it's LinkedIn or anything, is people that are in the fintech space, don't be shy and share your experiences. Jump on this podcast because there's so many similarities, whether you're doing non-bank lending or if you're doing something in payments or something in alternative asset management or financial services. We all deal with very similar problems. So keep sharing best practices. And it was a pleasure being here. Thanks so much.
No, thank you, Todd. I appreciate your time, and thank you so much for being on the show. I know your time is very valuable. So again, thank you so much for being on today.
All right, great. Thanks, Greg. Have a good rest of your day.
You too. And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.